This is the best trade of the day. It went to the upper containment band, pulled back. We have 1, 2, 3 pattern right here where the move up had almost no strength in comparison to the last drop, and the market took off. It became a trend explosion system right here, and when the market broke underneath that level, you could have went short or you sold this little up move right here, the sideways consolidation area right here, which was about a 75 pip drop, and just one of the most weak of all the currency pairs. And our currency meter showed that today. This is our video blog for November 29th. One of the first things I do when I look at a chart is where is price in relation to the hourly moving average, the gray line in the middle. When it's underneath it, it's more likely to go down, and when it's above it, it's more likely to go up. I also look at the daily, weekly, and monthly trend on the bottom, and preferably the weekly trend. In this case, the weekly trend's up. And so the market's kind of chopping around. It breaks underneath the hourly. We have a retest here. You would look to go short right here, with this your estimated profit target. If it breaks that, it's likely to find support at the 50-day moving average here. And notice as it's falling, the statistical weakness isn't that much. The weekly trend's up, so we don't really expect to make that much on the downside. Once it goes above the hourly, you might start looking for buys. This is a nice little retest right here where it can't get above the hourly or below the hourly, and you have a few nice trades in here. You also have an Elliott two-wave pullback to the hourly right here. It came down with less weakness and it went up, and that didn't generate too much of a move. Pretty dead day in the dollar CAD. Our currency meter did not show it as the most likely to trend currency, so you probably wouldn't have even watched this pair today. Here's the dollar yen, daily, weekly, monthly trends up, went down to our fib level with almost no weakness, so a great time to buy near the lows and when the longer term trend is up, and you can see the trend continued up almost the rest of the day. Here's a tricky one. The daily and weekly trend is down, but the monthly trend is up. When it's above the hourly right here, it's not really a good trade because the next resistance area is so close to it. You don't want to take trades where the likely profit target is only 1.5 to 2 times what your risk is. If you did take that trade, realize that for one, you're fighting the weekly trend, which is the primary one you use, and you're only likely to make 20 pips if you bought that breakout over the 200-day moving average and above the hourly. When currencies break from underneath to above the hourly, typically there is a pretty decent sized move, but the resistance area is right here. And you have a 1, 2, 3 reversal pattern right here, where the weakness on the way down is 10 times or 5 times more than the momentum on the way up. Because the weekly trend's down, you might have shorted right here with either this, the hourly, or the fib level as your profit target. And when the price broke underneath there and retested the hourly, couldn't go back above it, you're trading in the direction of long-term forces. This is a potential profit target, as is the previous week's low and the next fib level down here. Not that much of movement in this particular pair. Here's the Australian yen, where we have the weekly trend is down. The trend is up today, and the market double tops right here. Had a lot of strength. Then the strength on the second top is 1/2 or less of what the first one is. This is a perfect double top with divergence in the direction of the longer term trend. And not the best trade in the world because this is a potential support area, as is the fib, and underneath there you have the 50-day moving average. So if it broke the first one, it was a pretty decent trade. You might have only made 5 or 10 pips on this, or even lost because of the support levels right there. Once it gets into this little chop zone, you probably want to stop trading for the day, because if it breaks this level, it's likely to find support here, and that's only 10-15 pips away, and it's not worth taking a risk on. The euro was the weakest of all the currencies, and the dollar was the strongest today. The yen was also pretty strong, and we have a perfect 1, 2, 3 pattern here. The weekly, monthly trends down, went up to the previous month's low, had pretty decent momentum the first time, came down, hit the hourly. There's usually some support buying there. Went back up with almost no strength at all. Half the strength of the previous drop's weakness, and you might have went short right here with this 1, 2, 3 pattern. Or once it broke the hourly, it's very likely to go down because the weekly, monthly trend's down, and your next profit target's all the way down here at 110.85. You go short around 111.25 right here, and you have a potential of 40 pips or so. Now this is extremely weak. This is our trend explosion system. Once these levels get hit, the market usually continues down. You might have went short right there, sold this little up move right here with your stops right above the swing points, shorted right here, and you can see the market went down. Our trading zones found the low of the day because the weakness was subsiding. A perfect 1-2-3 pattern in the direction of the weekly monthly trend, and the euro was the weakest of all the pairs today, so this was a phenomenal one. The pound dollar had been down 3 days in a row. Oh, the pound dollar had been down 6 days in a row, so it's very likely to find some support at the lower containment band. So you had a great double bottom with divergence trade right here because the currency's been down 6 days in a row. And you also have another 1-2-3 pattern. The market went up, pulled back, went underneath the hourly, which is a sign of weakness, came back up, did a retest. Watch our support resistance retest video to see what that is, to the monthly pivot level right here. Great place to go short because the daily, weekly, monthly trend's down, and this is the most momentum it had all day. Extreme weakness on the way down, pulls back up, can't get above resistance, you go short, and you could have drawn your fibs off of this first move for an idea of where your profit targets are. And most people, when the market goes sideways for a while, get out of their trade. You can always get back in it again later. And because this thing's been down 6 days in a row, it's very likely at the lower containment band to find a reversal. So you got in trade here, down here around 55.33, and it went up to around 60.